this is Drew with Daniels Ag Services with your morning report. Markets all finished up higher yesterday. You had wheat leading the way to the upside, currently lower this morning. Wheat really stole the show yesterday. Beans were up over 20 cents as well, but it's the first time we've seen wheat up over 20 cents since August of this past year. So big day in the green for the wheat market. That's been nothing but really red candlesticks as of late with a solid downtrend. So why was wheat up so much yesterday? Well, it was really due to a lot of short covering. The crop conditions in the hard red winter wheat producing states are really down right now. So that was enough to inspire some short covering, and therefore a lot of short covering happened, sending the market up around 20 3/4 cents yesterday. So like I said, we hadn't seen a day that green for March wheat since back on, I believe it was August 26th. So pretty long drought to not see a green day like that for the wheat market. But crop condition ratings spurred the short covering rally. Now, crop condition ratings this time of the year don't really have a whole lot of correlation for how the crop actually ends up once it comes out of dormancy, so we'll have to see how that plays out. But it was enough to spark some short covering yesterday and send the market higher. And as mentioned, soybeans were up over 20 cents as well yesterday. You got lack of Chinese cancellations. Then you've also got March soybean meal making new contract highs. That's spurring the soybean market itself to trade much higher. Over 20 cents higher yesterday on the day. And the corn market was also higher yesterday as well for the trifecta, all three in the green yesterday. So Informa released their world production estimates yesterday. If you want to see those, head over to grainanalyst.com. Have the breakdown there for you. So moving forward today, keep your eye on the markets. One thing that technically happened in the corn market yesterday was it closed over the 100-day moving average for the first time since July. So that's for March corn. So keep your eye on that. We also closed above 440. That was seen as a resistance area. So keep your eye on that, as that could, a lot of technical analysts are keeping their eye on that, and it could spur some buying in the market. So that's all we've got for today. If you have any questions, let us know. Otherwise, have a great day.
This material is conveyed as a solicitation for entering into a derivatives transaction. This material has been prepared by a Daniels Ag Services broker who provides research, market commentary, and trade recommendations as part of his or her solicitation for accounts and solicitation for trades. Daniels Ag Services, its principals, brokers, and employees may trade in derivatives for their own accounts or for the accounts of others. Due to various factors, such as risk tolerance, margin requirements, trading objectives, short-term versus long-term strategies, technical versus fundamental market analysis, and other factors, such trading may result in the initiation or liquidation of positions that are different from or contrary to the opinions and recommendations contained therein. Past performance is not necessarily indicative of future performance. The risk of loss in trading futures contracts or commodity options can be substantial, and therefore, investors should understand the risk involved in taking leveraged positions and must assume responsibility for the risks associated with such investments and for their results. You should carefully consider whether such trading is suitable for you in light of your circumstances and financial resources. You should read the risk disclosure accessed at www.danielsagservices.com. Daniels Ag Services is not affiliated with, nor does it endorse any trading system, newsletter, or similar service. Daniels Ag Services does not guarantee or verify any performance claims made by such systems or services.